Tesla set to report earnings after the bell. The stock's down more than 40% year to date. The EV maker also cut prices over the weekend amid a slump in sales. Joining us now is Garrett Nelson, CFRA Senior Equity Research Analyst. Garrett, you never really got negative on the stock. I don't think you're negative now. And in summary, you think most of what we're seeing is in the price already as far as discounted. So you think this is an attractive level to take a position?
Thanks for having me. That's exactly right. But the stakes couldn't be higher heading into this afternoon's earnings release. As you mentioned, the stock is down more than 40% year to date after a year in which shares more than doubled. They've also missed each of the last 2 quarters on the bottom line. So there's a lot of pressure, much more than normal, on Tesla heading into this earnings release. And, we think the company, there's no question they face their fair share of challenges here. The EV market is oversaturated. The production ramp up of the Cybertruck so far has been slow. You've had a recall recently. You've had price cuts and more price cuts. And there's uncertainty regarding when and if they might produce this lower price mass market EV. But we think all these challenges are well understood by investors at these levels. And so we like the stock's risk reward here.
Yeah, just the classic fundamentals that you watch, like sales, which, that doesn't usually happen. That's an outlier. Or earnings, disappointing. That also could be discounted in the stock. But what about some of the conjecture about Elon Musk himself? He's in demon mode. He's now views himself, like the tweet that said he was a wartime CEO. There's, big layoffs coming, and maybe a fundamental shift in the strategy. You said a low-cost vehicle. That looks like it might even be on the back burner in favor of who knows how robotaxis or when that will ever happen. Aren't those bigger questions that might not be discounted in the stock price?
Well, certainly there's been a lot of reporting, a lot of news flow over the last few months regarding the next-gen EV, robo-taxis, et cetera. We think Tesla has more immediate problems, such as ramping up the Cybertruck. They reportedly have a reservation count upwards of 2 million customers waiting for their Cybertruck. So we think it's more about execution, working out the kinks with the Cybertruck, which is not unusual for a new model to have production issues. And so we're looking for more clarity regarding, when they might achieve certain levels of production of the Cybertruck. And then we're viewing the next-gen EV model and robo-taxi more as a 2025 event, potentially. But we'll hear more this summer when they do their AI event in August. So, but estimates have come down significantly for the company. So we think, the bar has really been lowered significantly. And so, we like the shares at these levels.
That's with the EV problems just in general for that industry as a backdrop too. And it's not like you're unaware of those. You point out you have, I guess your worst rating. Well, you have strong sells on some of the competitors of EV competitors of Tesla. So you do acknowledge that the overall industry is tough right now, especially with price cuts in China from some of those makers. It's a very difficult business right now. But you have a strong buy on Tesla?
We have a buy on Tesla, $220 price target, but we'll be updating that following the release. But you're right, we have been bearish on many of the pure play EV manufacturers for a long time. We have strong sell on Lucid. We have a sell on Rivian. We had a strong sell on Fisker for a long time before dropping coverage. But Tesla really has a lot more going for it than those companies. They have an investment grade balance sheet. They're sitting on over $29 billion of cash, industry-leading margins. They're still generating a significant amount of free cash flow, even after these price cuts. And we think they have an attractive development pipeline, looking out over the next few years. So the other thing is other auto manufacturers are really dialing back their EV investments. and their growth plans. So we think that means less competition for Tesla over the long term. And many governments around the world have put EV mandates in place. So the market opportunity is going to be there for this company longer term. And so we view this as a good opportunity, a good entry point in the stock longer term.
One of your, well, I guess it's a competitor, a different analyst anyway. He might be a friend of me, but he says there's just no doubt that the stock is going to undergo a painful transition in the ownership base. When, as investors that used to be all about EV volume and cost advantage and everything else, they give up because those things are going to be gone, and it's going to have a whole new share owner base that is buying Tesla for a different reason, and that could create near-term, I don't know, more volatility in the stock. Do you think that's going to happen? Do they need to attract new investors after the old ones throw in the towel?
Really, what they need to do is prove that they are worthy of the valuation premium that they receive in the market relative to other automakers. And that means proving that they're more of a technology company than an auto manufacturer. This is a company, trading at 8 to 10 times the multiples of many other auto manufacturers. But, they invest billions and billions of dollars in AI, in developing their new battery technologies. And so what they need to show is breakthrough that, these investments that they've been making internally are going to have a return in terms of earnings growth over the long term for investors. And so, that they Musk really needs to lay out that vision, because you're right. We've hit the stock has really hit a speed bump. It's a story stock. The story has really hit a speed bump here, and it's really about restoring investor confidence in the long term of the company.